Okay. Okay. Good morning. Hi, Chen, George Realty. Hope you guys all have a nice weekend. I'd like to thank those who attended the coach event sponsored by First American on Friday. Thanks to Angie Tang. Appreciate that very much, Angie. And we had 10 people who come from our office, and it was quite a informational seminar. And particularly, I like the section where they commend the coach the agent how to invest in real estate while helping their clients invest in real estate. And there's nothing wrong with you self invest in real estate too, because hey, 85% of the millionaire or billionaires has some relationship with real estate, and that is the proven way of getting financially sufficient. And it's not hard to do. It's very easy to do if you do it methodically. And I like it very much because I myself benefited from it. So I really endorse this kind of method. But anyway, thank you for coming to the meeting today. There is going to be it's kind of slow coming in. All the agents thought that today is a holiday, it's a Columbus Day. For some reason, it's named Indigenous Day or something. I didn't even know
Yes.
that until today. I said, "Oh, well, why is it named Indigenous Day?" But anyway, it's a Columbus Day for me, and most of the some of the uh, agencies are closed today. But anyway, we have Mark Wu who will be our affiliate speaker today, and I will introduce him later. But first of all, let's welcome the other affiliates, and let's begin with Nancy Chen. Nancy, good morning. How are you?
Good morning, everybody. Every day is a new day, and my boss, Victor Weiger, and some of them probably don't remember him. He said, "You have to be good to your realtors." And I said, "Well, give me a good reason." I said, "I'm good to them." He said, "They wake up every morning unemployed." And people there in sales, we don't have a sale, we don't have a paycheck. So I'm not saying you're an employee, you're your own boss, you're the employee, you're everything. So go out there, and if you need help, the office, us, I'm happy to be there for you. So thank you, lawyer's title, Nancy Chan. Thanks.
Thank you, Nancy. Good. Thank you very much. Next, we have Angie Tang. Angie from American Title.
Thank
Good
you
morning.
all. Good morning, everyone. Hi, Tim. This is Angie, First American Title. Thanks for everybody who joined in on our coaching event. I hope everybody took some good nuggets of knowledge. And just to be clear, Title did not pay for this. It was not title related. We
Oh.
were just it's illegal for us to pay, so we didn't pay for any of it, but we helped put things together, and there was a lot of labor of love. So
Oh, who
that's what we.
sponsored it then? Who paid
It
for it?
was the rest of a First American, Brandon, and then
Oh,
Sandy's
oh,
team,
oh, I see.
and 1031, First American 1031, First American Home
Oh,
Warranty, First American NHD, and then we had some escrow and some other affiliates that helped together.
okay, that
But
makes
we
sense.
did all the labor of love.
Good
Thank you
stuff.
for all joining. And I wanted to let you guys know, if you haven't subscribed to the First on Fraud podcast, please join us on First on Fraud. There is a very cool episode 8 that came out recently. I think it came out last week. And it's an interesting thing with fraud because you can actually steal from the dead. So that podcast is Halloween themed. So very, very interesting to listen in on. So how do you think a fraud can happen to the deceased? So if you don't know, please check out the podcast. It's going to be a really amazing way to figure out, wow, this can actually happen. And it does happen
Wow,
in the title
really?
world. So First on Fraud, look for it. I also posted the link on my Facebook and on my Instagram. So in case you guys didn't know how to get on the podcast, go to my Instagram, go to my Facebook, find me, and then go ahead and click on that link. So we're here to help you build your knowledge and, of course, keep your clients secure with a title policy. Angie Tang, First American Title. Thank you. Thank you,
Thank you,
Peter.
Angie. Appreciate it. Thank you very much. Okay, next we have Sandy Franco. Sandy,
Woohoo!
good morning.
Hi,
Nice to
everyone. Good
see
morning.
you.
Yeah, you too. So I guess you guys are going to get some rain, huh?
I guess
Rock on. So
kind of.
it rains here in Minnesota all the time. So I'm like, whatever. But let's talk about rain a little bit. So you can add coverage to your home warranty up to 60 days after the close of escrow. Call and say, oops, I forgot to put this on. Let me pay for it. You're good to go. The one you can't do is roof when it's raining. Because there's only one reason you're adding roof coverage when it's raining. Because you've discovered you have a leak. That's considered pre-existing. So if you think you want roof coverage, which I am not a big fan of, I'll try to talk you out of it 9 times out of 10. Make sure you put it on when you place the order. Okay? Because we're now getting into the rainy season. So adding it later, you run the risk of being told, you know what? Yeah, not when it's raining, or we'll let you add it, we'll take your money, but we're not going to let you place a claim during this rain, right? So be very careful. If you think you want roof, there's many discussions we can have. Order it when you order the warranty. Other things you can add later because it doesn't really matter. But there's only one reason to add roof coverage after the policy's closed when it's raining, and that's because you've discovered you have a roof leak. Every single home warranty company does the same thing. We all call it limited roof leak, and it's not named incorrectly. It's correct. It is very limited. The leaks must be caused by rain. The leaks must be over a living area. So let's say 90-mile-an-hour winds come through and they blow a bunch of shingles off, and it rains 2 days later and your roof leaks. That is not a roof leak caused by rain. That is a roof leak caused by wind. Okay? Wouldn't be covered. Just one of the reasons I don't like roof coverage. Plus, you're only going to get $1,000 total, all in, which means you're never getting a new roof, ever in the history of ever. So be careful. If you have questions, I've been doing this for almost 22, forever. So call me. We can chat. I want you to have the right coverage for your clients. I don't want to spend their money indiscriminately. I don't get paid any different depending on what options you get. So what you get from me is the truth, unbiased, and what I think is best for your client, not what's best for me. And that's what's important. I'll dump my info into chat, and I'm looking so forward to seeing you guys in November. My time here in Minnesota is coming to an end, and I can't wait. So thank you so much for your support while I've been gone. I can't wait to be home. Thank you.
So you're coming back in November?
Very first week. Yeah.
All right.
Yeah.
Good. Looking forward to that.
Me too. Thank you very much.
Thank you, Sandy. I hope to see you personally in the office. Okay, and now we have Brendan Saransky from First American.
Thanks, Peter. Good morning, everyone.
Good morning.
I am your third eagle flying in here to protect your nest. So I also wanted to piggyback off of what Angie said. Thank you guys so much for coming. And yes, my division and Sandy's division were the ones we had a booth out there. So if you guys saw our booth with some of our goodies, hopefully you got some of the candy, since I don't really eat candy, so I hope you took a lot of mine. Other than that, so I don't know if you guys saw, and Mark Wu's probably going to talk a little bit about this, but if you didn't see the Housing Wire article, I suggest you go check it out. I can put it in the chat, but they're talking about Fair Plan increasing in price. So obviously, when you get the NHD report and you find out it's in the high fire zone, I always tell you guys to try to get it done as soon as you get a listing, or if you're representing the buyer, to make sure that you request from the listing agent to see if it's in the high fire zone. And I always say, call Mark Wu or call your insurance person immediately to make sure you get on that conversation, because at the end of the day, none of us get paid if you can't close because of insurance issues. And if there's a loan that requires insurance, most cases it's become a challenge, right, to close. And so typically Fair Plan is the main policy that they're writing. And in a lot of cases, I've heard agents having to get a wraparound policy for their clients. So that's 2 policies on one house. Because of the rate increases potentially occurring, they're saying that Fair Plan could go up to 36% increase by
Wow.
April of 2026. So because of this, it's going to make it even more of a challenge to close. And so I know Mark's going to talk about this, but obviously I wanted to point it out just because this affects all of us. And when it comes to the fire zones, obviously we want to disclose it as early as possible. So when you get those listings, you find this information out, you want to get on top of the insurance stuff as soon as possible. The other thing I was going to mention is when it comes to tax season and the supplemental taxes, don't forget that that is in the NHD report, and you can use our tax estimator to be able to find out those supplemental taxes. I've been talking fire and supplemental taxes for the last year a ton. Why? Because it affects all of us and closing. If the supplemental taxes have a bill of $50,000 because the home hasn't been sold in, 50, 60 years, make sure you tell your clients and make sure they're aware that they have to pay that supplemental tax bill pretty much within 10 days. So those supplemental bills come, and if they don't pay them, there's penalties. So make sure you're setting that expectation with your clients. And anytime you go into a listing appointment, it's really good to be able to tell them, say the person hasn't sold their house in 10, 15, 20 years, even longer. There's so many new things in the process that you should just let them know about. And if you're trying to win the listing over, I guarantee you that most agents aren't talking about this stuff. So it's going to set you apart and really show that you are the expert. You understand what's going in the field of real estate and that you're looking out for their best interests. So use us, right? We're here to help you, to give you the content and the information to give to your clients. But don't forget, you being the expert and you being the person that can give them the information is just going to win you over even more clients. And that's what we hope, right? We don't do business unless you do business. So everything we can do to help you, that's why we're here. So I hope everyone has a fantastic rest of their week. And I hope to see you guys next time.
Brendan, the supplemental tax is the property tax that is after the closing of the escrow for the buyer,
Yep.
right? So the buyer would have naturally expected that they have to pay that kind of tax going forward. So why should it be a surprise to them?
Sometimes they're surprised because I've heard this story many, many times. They go out and they buy a new car, or they buy a nice Rolex watch, or they go and buy some nice jewelry. And then they're like, oh, wait, I forgot about this bill, just because once they close, they know there's a bill, they know that there's going to be a fee, but sometimes they don't know the amount. So if you don't tell them the amount, they're thinking, oh, it's only going to be a couple thousand. What they don't realize is the house hasn't been sold in 30, 40 years. They get a bigger bill than what they expected, and they bought that whatever car, nice jewelry, whatever. And then they realize, oh no, I don't have the cash to be able to pay for this. So that's usually the scenario that we've seen.
But doesn't the agent tell them that the property tax will be levied on them according to the purchase price, which is what is going to be going forward for
Tip,
the assessment of the property tax?
the good agents do. Sometimes agents do not. So
Okay.
that's why I'm saying it. Because
Yeah. Okay.
be the good agent and set that expectation for your client, because you don't want them coming back to you and saying, you
Yeah.
didn't tell me.
Okay, that makes sense. Okay,
Yep.
thank you, Brendan.
You're welcome.
All right.
Alrighty.
Okay, now we come to Mai Chu, Fidelity National Title. Mai.
Good morning, everyone. My True with Fidelity Title. So statistics is showing that each and every day, more and more people are searching for their agents online. So if you need help with Yelp, Google business page, Facebook business page, please let me know and I can gladly assist you. And online presence is very important. So if you need anything else, let me know. We also help with farming and all that and all our good products and everything. And I will gladly assist you. Thank you so much.
Thank you, Mai. Appreciate that. Okay, now who else we have? All the affiliates. I think that's all the affiliates. Do we have any affiliates in the training room, Michelle?
No.
Okay. If not, then we'll come to our affiliates spotlight today, which is Mark Wu. Go ahead, Mark. Good morning.
Good morning, everybody. Mark Wu here.
38 years in the business, just a little below Nancy, but actually met Nancy at your office decades ago. I won't say when, but decades and decades. But anyways, go ahead, Michelle, next. I'll just say.
Okay, hang on. I'm trying to get my bearings here.
So just while she's getting her bearings going, yeah, the Fair Plan announced a rate increase. They're with the Department of Insurance. They asked for a 36% rate increase. That doesn't go into effect till next year, but it's going to be on the renewals and also on the new policy. So fortunately, for the next at least 6 months, we have the current rates, which aren't that great anyways, but the challenges of insurance right now are tremendous in the industry, and prices have gone up, policies are limited and all that. So you just got to set the expectations to your buyers that they're going to be paying a whole lot more than they're accustomed to if they want to become a homeowner in California, especially in our brush areas. Are you still having problems, Michelle? Michelle, are you still having problems?
Just a second. I've got somebody up here helping me. Hold on.
Okay. Anyways, let's see, what should I wanted to go through the slides because it's easier and all that, but the biggest thing I see is escrows are falling off because of the insurability, but what I'm thankful for is that I've been busier than ever. So somebody is selling homes out there and buying homes because I'm getting quite a few more requests than I anticipated. So the industry, although not the best, is still going strong despite the high rates in loans and the high rates in insurance costs. Again, I'll just go through without the slides and hopefully they can catch up. So been in the business, like I said, 38 years, had an Allstate agency for 36 of them, sold that. And then I partnered myself. That's why I call myself an insurance consultant with 3 different brokers. The reason why for that is because it's so difficult to get insurance. And I'm getting all these calls from former realtors or even realtors that know about my name because I've been active in the real estate industry and both the San Gabriel and Arcadia board, whereas their sources have dried up. So they call me for help. And so I try to assist them and be the middleman. And so I find solutions for your buyers that need insurance. And so that's why I can't just go to one because there's so many different criterias and all that. So oftentimes what we have to do in insurance of last resort is the California Fair Plan. The sad thing about the Fair Plan, though, is that it's not very consumer friendly. We're at the mercy of their customer service, providing us a proposal and the time frame and providing the evidence of insurance for escrow. But we are able to do it, and I'm doing quite a few policies like that. You have to come around with a DIC policy called difference in coverage policy. What that does is that provides for liability in the event. Let's see if she got on. I guess they're still having a problem, but okay. I'll go through these real fast because we've already gone through time, but this is my family. This is why I work. My wife, Susan, and I have been married 36 years. We have 3 beautiful daughters. One married to the left of Susan, the youngest one getting married next year, and the other one probably the year after. So then Dad won't have to work as hard anymore. Next. I'm also involved in a lot of mission trip during these things. So I love giving back to the poor. I think for too much who has been given, much is needed to give back. So I do things. I go world traveling and enjoy that. Go ahead, Michelle. We also, this past 3 years, started a transitional housing, my wife and I. So we have 75 residents in the Texas prison system, low-level offenders that just need job opportunities, a place to stay and whatnot. And we do that along with counseling and training and all that. And this is run by my daughter. So it is a nonprofit, but we have fully funded it for the last 3 years. Go ahead. So as you guys know, we had a crisis before the fires and it only got worse. And so go ahead, Michelle. So standard insurance like State Farm, State Farm, Allstate, many of the companies are restricting their ability to write insurance. So there's very few companies right now that's offering standard policies. And so we have to go to a secondary market. Go ahead, Michelle. Okay. As you know, our Altadena and Pacific Palisade fires will be the most costliest fires in our industry. And this is what's crippled it. People say, well, why don't companies want to do business in California? Because for every dollar that they're bringing in premium, they're losing over $2. So they don't want to do that kind of business. And that's why they want out. I've already gone through that. Go ahead, the next one. So here's your alternative versus the FAIR Plan, right? And it's basically an institution, and it's basically gives fire protection for basic coverages, and the lenders will accept that. However, the problem with that is that it doesn't cover for things like liability and water damage and all that. So we have to come back with a second companion policy called difference in coverage. Go ahead, Michelle. So here's what the FAIR Plan policy covers. This is what's going up 36% next year, but it covers these basic perils such as fire, lightning, internal explosion, and smoke damage. You don't see water damage. That's from bursting of the pipes. Flood is never covered, which is surface water hitting and coming back into the house. Go ahead. So here's what the FAIR Plan doesn't cover, and that's where we come in with the difference in coverage policy. So, when we see all the Santa Ana winds and the trees falling on top of our houses and all that, no coverage for that or for liability of slip and fall or whatnot, or theft of contents. But thankfully, we have a secondary policy that we come into that. Next. So another solution, which is a solution I've been using quite a bit with my broker partners, is called a not admitted carrier. And these carriers will offer insurance. It's a little bit more pricey, but you don't have to have two policies for one. So in my professional expertise and recommendation, I refer these non-admitted carriers before I will refer FAIR Plan. And the way you protect yourself, because they're not regulated by the Department of Insurance, is that there's 5 different financial institutions that basically evaluate the financial soundness of these companies. So as long as they have strong ratings, then I'm comfortable that they have the wherewithal to pay claims. Naturally, nobody can guarantee that they won't be out of business and run out of money. Nobody can guarantee that with the FAIR Plan. Nobody can guarantee that with standard policies. So it is a risky business out there in the insurance industry, but that's how it is. Next, I believe. Oftentimes people think that, hey, FEMA will come in. Why do I need it then? Right? But maximum FEMA payout is $43,600. That's not going to cover anything other than your daily living expenses and temporary housing. So it is a wrong myth and misnomer out there that government will give us loans to rebuild. You can see it with our own backyard in Altadena and Pacific Palisades, that there's no money out there for people to rebuild their homes. So basically, if they didn't have fire insurance and they didn't have their own money to rebuild, these people are out of luck. I believe that's it, but thank you so much. That's my contact information. I'm always accessible if you need assistance, even if I'm not part of the transaction.
Mark, I heard a lot about the Altadena and the Pacific Palisade area where they bought some land and then they have difficulty getting the fire insurance, and so
it's extremely difficult, but I still have markets I can go to get it. These non-admitted carriers.
Oh, okay. But what do we have to tell the agents what to anticipate when they're trying to sell the land in Pacific Palisades or the Altadena? Because of a lot of things that the
Well,
buyers
first of
don't
all,
know.
if they're not going to build, so it depends on what the buyers are going to do. So say if the buyers are going to just buy the land and sit on it a while, or it's going to take 2 years to get it through. What they can do is buy a liability policy only. So what you're mainly concerned, because there's no structure to be had and built, they can't buy a homeowner because they're not living in it. So
Right.
they just get a liability only policy on the premises. All right. And then once they start building, then what we do, in fact, I'm dealing with a case right now as we speak, a course of construction insurance, where we're going to provide the insurance and the liability insurance while the house is being built. So there are policies out there. As far as premium, they're all over the place. I mean, they can be from 5,000 to 20,000, depending on how big the house is and where it's going to be.
Yeah, it's ongoing problem, we can say. All right. Thank you very much, Mark. Appreciate that.
All right.
All right. Any questions for Mark before we let him go? Okay. Thank you, Mark.
Catherine?
Yeah, didn't you say, no, I just saying to you. Didn't
Oh,
you say
never
that-
mind. Thank you.
Oh, okay. All right, let's then continue with the meeting. There's no lunch and learn that this week because we had one last week. But there will be training by Nancy Chan on Friday. The topic is how to read and view the preliminary title report, which is very important. A lot of agents don't even know how to read that carefully. And there's a lot of information in the preliminary title report that is vital to the buyer, and you really need to properly inform the buyer before you close escrow. Otherwise, it will come back and haunt you. So Friday will be a very good training to freshen up your concept and knowledge about the preliminary title report. Okay, and as for the you know that the Halloween is coming at the end of the month, and last week we have an elaborate one, but this year we are going to have just an informal one where it's going to be just the internal in-house. We won't be inviting the outsiders such as the affiliates. Because it's too much work for Michelle. We have a lot of big parties lately, so we decided to just scale it down and put a kind of inside a party for ourselves. So, but you're welcome to join and help out and bring some your favorite dishes to the party, and I'm sure that everybody will appreciate that. Okay, so.
It's October 31st, Jimmy. It's on 2 to 4 p.m. in the training room here.
Yes. Yeah, at the end of the month. Okay, any questions? If not, I would like to ask Michelle to tell us what's going on with the listing and the sales. Michelle?
Oh, okay. So last week we had a pretty good week with new escrows. We have 701 Cornell Street in LA. That was put into escrow at $750 by Herman. He is the selling agent. 419 North Chandler, number 521. It's a condo in escrow at 713. Nina and Tatiana are the listing agents. 7556 Grinland Road in Rosemead, 1.730. That is a residential sale by Mandy Zhang as the selling agent. 486 Edlano Terrace in Monterey Park, 1,080,000. Tatiana Dang is the selling agent. That's a residential. 1117 Oakbojo Drive in Arcadia, 1.380. Listing agent is Eric Toe. That's income property. 1735 Mountain Terrace in Montebello, 570,000. Nick Nguyen. It's residential. Banya Street in Rancho Cucamonga is land 2.80, and that is sold by Kathy Wong. New listings 4917 Ensenada Avenue in Temple City 1.650. It is a commercial listing. Shumay and Harrison Cam 9110 North Mission Boulevard, Riverside 1.880. Commercial listing Shumay and Harrison Cam 197 North Nicholson, Monterey Park. That is a condominium or a townhome, excuse me, 817,000, and that's Shumay and Harrison Cam. And then they have Shumay and Harrison have 3 leases on Fannel Street in Arcadia. That's residential, 2 for $23.50 and another one for $18.50. Weekly closings. North Chandler, number 616, closed at 7:20. Condo listing agents Nina and Tatiana. 9742 Woodell Avenue, Arleta, 730,000. Juan Volente is the listing agent. That closed. It's a residential. 119 South Atlantic Boulevard, number 217. That is a residential lease, 9,000 is the sale price. That's, or excuse me, that is a commercial. It's a small unit. Karina Pang, 27 Kelburn Drive, Rosemead, 1.115. Anna Lasarda, that is an income property, closed. 120 North San Gabriel Boulevard, 125,000. Business sale by Karina Pang. 17851 New Bank in Roland Heights. Christine Chen, that's a residential sale at 1.145. 500 North Atlantic, number 141, commercial lease. Shumay Cam, valued at 770,000. Number 137 at Atlantic Times Square, valued at 1.366, commercial lease by Shumay Cam. And finally, number 101 at Atlantic Times Square, valued at 274,000, commercial lease, closed by Shumay Cam. Great week, everybody. Thank you so much. It was
Yeah.
good to see you all.
Wow, great job, Michelle. Yes,
Yes,
the agents are working hard.
they are.
Good, yeah. Good. Thank you very much. Is there any new listing or new reduction in price that anybody want to pitch? Or any open houses that you need help? This is time to speak up. Anybody?
We have a question in the chat. It
Okay.
says for Mark Wu, are commercial properties affected by the insurance difficulties?
Is Mark still with us?
Yeah, I don't know.
I think he left.
Okay.
Let me see. I think he left.
Yeah, he's gone.
Yeah. Okay. All right. No problem. You can always call him. He's pretty available over the phone. So, anything else? If not, I'll go.
Peter,
Yeah,
this is Steve.
Steve. Yeah.
Yeah, to answer the question about the insurance on commercial properties, yes, it do have an impact. The impact is not really related to the fire or something like that. It is to something else. For instance, for the hotels and motels, that have an impact on the retail. They do have impact, even on the industrial. So you should hear that from the mouth of horse, which is Mark Wu. But from my observation, yes, do have some of the premium are increasing. It's they don't care if you are a residential or commercial. Bad news.
Yeah, I know.
Yeah.
We're getting more and more complicated, trying to get insurance for commercial real estate. Unfortunately, but hope they'll work on it next year, and hopefully they'll come up with some solutions. Anyway,
Yeah,
I
so
think
that's
nothing
the
much we
life.
can do. Yeah. Thank you for the feedback, Steve. Okay, if no question, I would like to share my message today. Yeah, I would like to talk to you about selling condos in California. You know, lately, actually this year we have a lot of condo sales. We sold more than 100 condos this year. You know, a lot of them are by Nina Shi. You know, selling the James Charles project, and a lot of them sold by also by the Shimei Cam. Also, the agents selling a lot of condos because condos are more affordable now compared to single family residence. You know, a basic single family residence is over $1 million now in Monterey Park in Alhambra area. But the condo, you still can find some condo at $700,000 to $800,000. So that's why the buyers are switching to condo. But a lot of agents think that the condo is an easy transaction, but in fact, they are even more complicated than the single family residence because they have another component they have to deal with, which is the HOA. You know, and a lot of times if the HOAs are not set up properly and have proper documents, they can delay the closing of escrow a lot. And it happens to a couple of agents lately. So that's why I want to spend this time and trying to visit, you know, how you can handle the condo deals so that the escrow will not be hampered in the process. Okay, so hopefully that will help you. Well, the goal, of course, is to make sure that you have all the required disclosure, you have all the HOA documents and compliance items, so that you can close the escrow on time. And they're all often in the condo sales, the escrow process is slow by missing some of the documents and some of the HOA concerns. And so I want to go over that with you today, and so that you have a good idea of what you have to expect. First of all, when you have a condo listing or sale, you have to find out the property and ownership verification. So the best thing is to order the title report, the preliminary title report, as early as possible. They always recommend us to order the preliminary title once you get the listing, because you know, you don't have to pay for the title until it closes escrow. So yes, there's no harm to order that early. You won't be charged, you know, unnecessarily because of the non-closing of escrow. So order it as soon as possible, as soon as you get the listing, and get all the information in the title report, because the title report will give you the legal ownership and the vesting information. And the properties are either owned by individual or the corporation, LLC, or trust, or corporate, or other partnerships. If they are owned by individuals, you make sure that you have all the owner's name on the listing agreement as well as the contract of the RPA. And if it is corporate ownership, you make sure that you either have the operating agreement or the bylaws of the corporation or the article of incorporation of the corporation. Make sure that that you have the proper authority, either as the manager of the LLC or as the president or secretary of the corporation. And if it is a trust, make sure you have all the trustees' name. Make sure they have the authorized signatures for the listing as well as for the closing of the escrow. Second thing is that you have to verify the outstanding loans and liens. and it's all contained in the preliminary title report. Because all the mortgages are recorded, and all the liens and like mechanics liens or judgments liens and the HELOCs, trust deeds, they all recorded in the recorder's office, and is readily available in the preliminary title report. So but you have to verify them. You have to go through that. You make sure that that you are aware of those liens and outstanding loans, and because all these has to be satisfied before the closing of escrow. So the earlier you come to know about it, the better off it will be, because the buyer has to prepare for all those documents, or to cure them as a matter of fact. And then you need to identify the condo units. And usually in the condo complex, there's a lot of condo units, and make sure the APN number is the ones that you are ready to sell. Because sometimes if the APN number is not correct, and once you discover in the during the escrow period, there's a lot of trouble, correcting that. So make sure that the APM is correct, the unit number and the legal description matches the county records. And also make sure that the HOA is in good standing. Recently, we have a case where they found out that the HOA itself is not in good standing, because they didn't file the statement of information, and they didn't pay the dues for the statement of information, and also they didn't file the necessary tax returns every year. So in order to correct that the status, they have to go through the Secretary of State and also the Franchise Tax Board. And that, when you go through Franchise Tax Board, it takes a long time. It takes about 6 to 8 weeks. So imagine if your seller is depending on the closing of escrow in order to get the 1031 exchange, and then the escrow is delayed by 8 weeks. They could miss the 1031 exchange, and it could be very detrimental to the 1031 exchange transaction. So make sure that all these the things are properly done before the closing of escrow, and make sure that the HOA is in good standing. Make sure that you have all the documents and associated with the HOA. And then you have to find out the HOA account status. Verify that the HOA dues are all current. If there's any special assessment dues pending, and then you have to resolve them early to avoid escrow delay. Because the HOAs will not issue the demand until the account is current. So make sure that the one that you're selling, the account is current with the HOA. And there, that even for single family residence, it has a lot of seller disclosure documents that you have to furnish to the buyers. The same thing with the condo, because the condo is considered to be is considered to be residential transaction 1 or 4 units less than 1 to 4 units. Okay. So first of all, the transfer disclosure statement (TDS) is required, and this TDS will cover the defects, repair the systems, and appliance and things, and that must be signed by the seller. And then this has a 5 days grace period. In other words, if you produce the TDS, the buyer has 5 days to back out the deal. So the sooner you produce the TDS, the better. This next document, the seller a property questionnaire SPQ, which must be signed and reviewed by the seller and given to the buyer. The third one is the NHD, and NHD is getting more and more important now because of the natural disasters. A lot of more disasters in terms of flood zone, in terms of the earthquake zone, and the fire hazard zone. And as John Wax said, that you should order the NHD as soon as possible, because that will uncover some of the concerns that the buyer has regarding the property in terms of the flood, earthquake, and the fire. And then they also must include the state's hazard booklet, which is the name as a homeowner's guide to earthquake safety. And the fourth documents that you need is a lead-based paint disclosure if the property is built before 1978, because before that time the lead paint is very, very popular, and you need to disclose that to the buyer. And then you have the water heater and the smoke detector compliance, and make sure that you comply with all that. Make sure that the water is all properly brazed, and the smoke detectors are in place, and those has the safety requirement. And then making laws that tells you the the sex offenders residence and whereabout, and all. You have to satisfy the statutory disclosure as well. And then you have the package. This is the HOA package that you demand from the HOA. This is very important. This is one of the single biggest source of escrow delay in condo transaction, because these are very substantive documents, and you have to provide to them to the buyer as soon as possible. And that composed of CCNR, which is the covenant, condition, and restriction that will govern the rule for the property use and restrictions. And all the condo has a CCNRs. And also the bylaws and article of incorporation, which is for the HOA, home ownership association. And then you have a current operating budgets that shows that the dues and incomes and the reserve allocations, and then the most recent financial statement. Make sure that the HOA are financially healthy. Then you have the reserve study summary, which you have to revise it every year, and it is for the research for emergency use, and has to be done and shown on the report. And then you're supposed to produce the HOA meeting minutes for the last 12 months, and make sure that everything that was considered in the HOA are acceptable to the buyer. And then you have the HOA insurance certificate. Make sure that you have the common areas insurance coverage. Otherwise, if something happened to the common area, they won't be covered. Although you have the single individual condo liability insurance. And also you should have the statement of assessment of delinquencies. Make sure that they're all up to date and all are paid. And also you should have the litigation disclosure to tell people whether the HOA has any pending lawsuits. That's very important, because the buyer, if there's a big lawsuit with the HOA, the buyer probably will not try to get involved by buying into the HOA. So make sure that they are okay with the litigation disclosure, and make sure that they know about the litigation if there is one. And then the rules and regulations are very important, because that will govern what they can do or not do in the HOA. It covers the move in, move out, the procedures, pest policy, and parking, so etc. and then the completed civil code section 4525 summary form has to be produced too. Lastly, you have the HOA demand statement, the final payoff to show current balance, transfer fees, and move out fees. And all these 12 documents has to be produced provided to the buyer before the close of escrow. And then lastly, you have the financial and escrow documents in which you shows the mortgage payoff information. It shows the property tax status, and also it shows the HOA transfer fees and move out fees. Usually the HOA fees, the transfer fee is about $200 to $500 for transfer of the HOA membership ownership to the buyer, and for the move out and move in is about $100 to $300. It all depends on who wants to pay for those, and so you have to be properly allocated. Okay, and also lastly, you have the special the assessments, and if there's any special assessment, you have to disclose it to the buyer as well. And okay, the physical condition and access items. If you want to do the pre-sale inspection, that's good. I think that's recommended if you can do it, because that will give you a general idea what the condition of the condo is. Then you can find out also for the keys and garage remotes and things like that to be transferred to the buyer, and also the HOA move out policy, the parking and the storage and informations and stuff like that you should convey it to the buyer as well. And then the title, the lender, and the compliance. First of all, the title and preliminary title report. That you usually order very early, and then you have to satisfy all the liens and judgments, and then the HOA, the certificate questionnaire for the buyers to satisfy the buyer. And if you are applying for FHA or VA loans, and this is the condo project approval need to be approved by the FHA or VA. So now this is the timeline, and what I summarize to you, and which delineate what the step you should take, and who should handle it, and when to do it. So I'm not going to just repeat this slide, and you can kind of go to it as a reference and do it appropriately. And then lastly, you just have a checklist. You just check off all the things that is listed here. If you get it all checked out, listed there, you're in good shape. And then you can have a smooth closing procedure. Then you don't have to worry about the delay or anything. So this is very important, and it's little things, but they are very vital in the closing of escrow. Okay, so this is all I have for you today. And is there any questions? Any questions you want to ask me at this point? We're right on time today. How about that? Okay.
That list was good. I'm going to print it out and keep it. Those two
okay,
lists.
good. Yeah, this
Yes.
is good for as a reference.
Yes.
Make sure that those are the items that you should get ready for.
Yes. Thank you, Peter.
You're welcome, Rebecca. Anybody have additional questions? Are you okay, Jimmy?
I want to say that the work that you're doing, Peter, is outstanding. This kind of information is absolutely critical for doing a good job as a real estate agent. Thank you.
Yeah, it's my duty to help the agents. Okay, David, thank you very much. Okay, anybody have any other questions?
Peter,
Yeah. Yeah.
I wanted to make a quick comment just in case people have forgotten through Ignite RE. There's a site there, a link for you to pull out HOA information in case you needed it.
Oh, okay, okay.
Yeah,
Oh,
we have
good,
it on
good,
our
good, good to
Ignite RE.
remind.
Mhm.
Good reminder. Thank you very much. I
Thank
know
you.
RE Ignite is very useful. Yeah.
Thank you.
Mm-hmm. But if you need to use the RE Ignite, you have to register with Angie. Angie will give you a special permission to use it. Thank you, Angie.
Welcome.
All right, and anything else? If not, I wish you a very nice week, and yeah, I'll see you next week.
See you guys
Bye-bye.
next week.
Bye, everyone.
Bye-bye.